So illustration 3, from the undermentioned receipts and payments account for the year ending March 31st, 2002 of Nagi's Club, prepare a income and expenditure account for the same period. So this is the receipts and payments account. So with some adjustments. So in the books of Nagi's Club, we have to prepare income and expenditure accounts. So let us start. So okay, before going to start, I'll just put a star mark for each and every adjustment for the for my convenience. So salaries, first adjustment, salaries, and entertainment expenses, and bank interest receivable. So receipt, bank interest receivable, subscriptions accrued, subscriptions. Next, 50% entrance fee, and furniture, purchase of furniture. So, um, so we have another one within the receipts and payments account, that is nothing but purchase of 5% government papers. So it is not, even though it is not given an adjustment, we have to assume that we have to calculate the interest on these investments. So there are 6 plus 1, 7 adjustments are there. Okay, let us start. So purchase of furniture, we have to calculate the depreciation. Depreciation on furniture. So how much it is? Furniture, we have an adjustment 10% per annum. So 10% it comes around 500. So, but it is purchased on July 2001. In the sense, we used this furniture, this club used this furniture for 9 months. So 5000 into 10% is equal to 500 divided by 12. And we have to consider only 9 months. It comes around 375. 375. So next one, salaries. Salaries 2000. So we have an adjustment, outstanding salaries 1500. So salaries 2000, add outstanding 1500. So it comes around 3500. So next one, telephone expenses 300, no adjustment. Next one, electricity charges 600. Next, postage and stationery 150. Next, entertainment expenses, we have an adjustment. Add outstanding. Entertainment expenses 900, outstanding 500. $1,400. So purchase of government, we have to calculate interest, and that interest is the income. So next one, miscellaneous expenses 600. So with this miscellaneous expenses, I think expenses are over. Okay, next one. We'll go to the receipt side. Subscriptions are major source of revenues. So subscription for the current year 10,000. During the year we receive 1500 for 2001, 500 for 2003, but we should consider only current year's subscription, that is 10,000. And add, we have an adjustment, accrued subscriptions. Accrued subscriptions 400. So it comes around 10,400. So next one, donation. So there is no sign of purpose. Then we have to consider this as general donation, and we have to mention it in the income side. 2000. And hall rent, it's a revenue 300. And entrance fee 1000 rupees, we have an adjustment. Thousand less. Generally entrance fees are capital receipts for the clubs, that too if it is non-recurring nature. So here they mentioned 50% of entrance fee is to be capitalized, and the remaining 50% we should consider as revenue. So we have to deduct the 50% of capital, 50% of capitalized amount. Capitalized entrance fee. So it comes around 500, and 500, the remaining balance we should consider as revenue. So here, which we should not forget, purchase of government papers, 5% government papers, in the sense investment, 5% investments. So interest we have to calculate. Interest on investments. So government papers. So how much? So 8,000 into 5%. It comes around 400. So for how many months we have to calculate? Into 6 months only. 6 months. Because every 6 months they will calculate the interest amount and they'll credit to your account. So for 6 months it comes around 200. So 12,000, 13,000. So we'll just see if we ignore something. See here, interest on bank deposits 450. Interest on bank deposits 450. I think we have an adjustment. Bank interest receivables. Add receivables. Add receivables. $150. So it is 600. So comparatively, incomes are more. So it comes around 14,000. So 14,000. The balancing figure comes around 7,075. So we should call it as surplus. Excess of income over expenses. So this is how we have to prepare the income and expenditure account from the receipts and payments account.